Hello, everyone, and welcome to our training today. Today, we're talking about commercial credit versus consumer credit, business credit versus personal credit. We're going to talk about the differences here. Everything from how the scores work to how the credit bureaus work to just a lot of things you need to know that are different between how your commercial credit score that's linked to your EIN versus your consumer credit score that's linked to your social actually work and the differences between them. So let's dive in. A lot to cover today. For those who don't know me, my name's Ty Crandall. I'm CEO at Credit Suite. At Credit Suite, this is what we do. We help business owners build business credit for their EIN that's not linked to your personal social security number. We help you separate your consumer and your commercial credit to give you a ton more borrowing power, but to also separate your liabilities. So you're not personally liable for what actually happens in your business. So welcome to our stream today. By the end of this training, you're going to understand how business credit works, how personal credit works, and the differences between them. And by understanding that, it's going to give you a greater ability to help build your consumer and your commercial credit scores. So let's dive in. So let's talk a little bit about what business credit. So this is credit that is based on business accounts, not personal. So basically, your business pays its bills. You pay your bills, right? Business credit is the actual paying of your business bills. It's how your business pays its bills or how you pay your business's bills. But we're ultimately talking about how business accounts that are for your business are paid, not your personal accounts that are linked to your personal social. So business credit scores reflect a business's credit worthiness, not you as a consumer, right? So when we look at credit scores overall, that's what they do. They basically show your credit worthiness of getting loans, credit cards, many other different types of things. Well, in the business world, your business credit score reflects your business credit worthiness or your business's worthiness to be able to get the financing it needs versus you as a consumer. It really looks at how fast you're paying those business bills, how many accounts you're paying on time, or how late you're paying on average the accounts that you have, the ability for the business itself to pay its debts, the credit cards that are in the business name, the loans that are in the business name, the supplier accounts that you have. How does the business pay its debtors, the money that is actually owed by that business, not the business owner's abilities to pay those debts? So very, very, very big difference. So how is business credit different than personal credit? Well, there's difference in a lot of different ways. Okay, they're affected differently by late payments. We'll talk about that today. The amounts that are reported on the credit report, the balances and how those report, inquiries and how those are treated into your score, amongst many other things. Now, a little bit along the way today, because I usually use two screens, but when I'm traveling, I only have one. So I'm going to come in here and I am going to show my little taskbar here a few times in between just to make sure that everything is going and to see if anybody has any questions as well. So I'm going to go do that real quick because I can only see one screen, whereas usually I could see a couple. So I don't have any comments yet. So it looks like we're good. If you have any comments, go ahead and type them in. Okay, so how business credit different from personal credit? Well, things are reported differently. Monitoring is different. Who reports to the business credit reporting agencies versus consumer different. How long information stays on your report. How the account names are. So this is just, I don't know, 7, 8, 10 of the many different differences between consumer and commercial credit. And again, today we're going to jump in and take a look at a lot of those differences. So let's start with late payments. Well, consumer and commercial credit are obviously are both affected adversely by late payments, okay? And business credit's affected a lot faster than what consumer credit is. So late payments are not reported on personal credit until you're 30 days late. And this is a really big, important thing that you need to know. So in the consumer credit reporting agency, you can't even be reported late until you're 30 days late. In the business world, the day you are late, you are late. And it's considered DBT or days beyond terms. So the minute you fall one day late, you go into like a 1 to 10 days beyond terms category. So if you've got a business debt that's due August 15th, you need to pay it on or before August 15th. If you have a consumer credit debt that's due August 15th, you wouldn't even be reported late until you paid it till September 15th. You have 30 days before it's reported late. So big difference. In the commercial world, if you are 1 day late, your score will start to be adversely affected and it will show on your credit report that that account is being paid late. Now, inquiries, credit checks on personal credit will lower your consumer credit score. As a matter of fact, inquiries affect 10% of your overall consumer FICO score, okay? And that's only if you get hard credit checks versus soft inquiries. So a soft inquiry is where Somebody can kind of behind the scenes pull your credit report, but it doesn't show on your public report. So it is possible, but if you're doing a normal inquiry, applying for a car loan, applying for a mortgage, applying for a loan, a credit card, it's going to adversely affect your credit score. Okay, now business credit's different because a credit check on your business credit report does not affect your business credit score at all. Okay, so it will show on your commercial credit reports, it will show that you have inquiries. It will not show who inquired. Another big difference. On consumer reports, we can see what companies inquired into your credit report. In the business world, we won't see the name of anybody that inquired. We just see the number of inquiries you have, and those inquiries do not adversely affect your commercial credit scores, but they will with consumer credit. Matter of fact, let's dive in a little bit deeper. So some myths about consumer credit inquiries and the way the inquiry system works. An inquiry won't directly lower your consumer credit scores. What lowers consumer credit scores is groupings of inquiries. When the reporting agencies see that you are going and applying for a lot of different credit in a short period of time, that will adversely affect your credit scores. Now, it's enhanced if you didn't get approved for those accounts. So if I go have 5 credit card inquiries on my credit report and I got no credit cards that then report on my credit report, it hurts my credit score worse than if I actually had 5 inquiries and got 5 credit cards. So keep in mind, the way that inquiries work on the consumer credit report is that it's groupings that adversely affect your score, and it hurts your score more if you didn't get accounts as a result of those inquiries versus if you did. But remember, inquiries do not calculate in to your commercial credit scores. So the data that's reported, well, that's another big difference between consumer and credit report. Okay, so in addition to late payments being reported much more quickly, like the next day in the commercial world versus actually when we're seeing with the consumer credit. So with business credit accounts, they're listed by industry, not the name of the company. This is a big problem a lot of people run into when they're trying to build their business credit. So they go to get their credit report, and instead of seeing Office Depot or Staples, they see office supplies. They see shipping supplies. They see industrial supplies. So you have to keep very close track of the accounts that are getting added to your business credit reports, the new credit you get, because you will not see a commercial credit report with the name of the credit issuer. And so if anything's wrong, it's really tough to challenge that. It's really tough to even know what's happening because you don't see the name of the actual creditor. Now, obviously on consumer credit scores, we see that on consumer credit reports. So if I see Staples, I see Staples on my consumer credit report. But again, that's very different in the business world. Now, personal credit reports show the exact amounts of accounts, while business or credit accounts are rounded up. So you might see the $1 or $10, but in the business world, we round those up. In the consumer world, they are supposed to be exactly the real balance of what's owed. Now, how long information stays in your personal credit report varies, but typically it's the life of the file. So when it comes to consumer credit, here's how it works. Things are allowed to stay on your credit report basically for 7 years past the last time you made a payment on that account. So if I have a credit card, I default, I stop paying. If you look at the last date I made a payment, 7 years beyond that date, the account is no longer allowed to stay on my credit report. Now, it changes with public records. Public records are 10 years. So 10 years, a public record like a bankruptcy, like a judgment, can stay on your credit report from the date that it was last paid. After that, it has to be deleted from your credit report. Now, in the business credit reporting world, it's very, very different, okay? It can stay on there for an average of 3 years, but last week we went through how long things stay on your Equifax credit report, and as you saw, if you were with us, there's a different time frame for everything. Collections are on there a different time than public records and lawsuits, and all these different things have a different time period of what they stay on there. So literally, there's like 10 different categories of how long stays on each one of your credit reports with D&B, Equifax, Experian. If I pulled that up slide by slide, you'd see collections stay on there with D&B for 3 years. With Equifax, it's 3 years and 6 months. With D&B, it's 3 years and 9 months. So you would see that every type of account stays on your credit report differently in the commercial world based on the type of account and based on the bureau. It varies wildly, as though even though we do not see any of that in the consumer world, it's pretty cut and dry with how it works in the consumer world. It's 7 years or it's 10 years. But again, in the commercial world, what we see is we see that things will stay on there a long time based on the different kinds of accounts. So IHAB says, great video. Thanks for tuning in. AJ says, thanks for the free knowledge. Thanks for tuning in as well. Caesar, great. Hello from New York. Thanks for coming back. Keith says, Ty, can you usually get a typical business-to-business vendor to report to the credit bureaus on behalf of our business? You typically can't. And here's why. If an account doesn't report to the business credit reporting agencies now, there's a reason. Even the type of company can't be approved by Experian. Maybe they're an industry that's restricted, and industry won't let, or Experian won't let them report. Here's the bigger problem. The credit bureaus in the consumer world require a higher volume of accounts be reported before they will let those accounts get reported. So let me give you an example here at Credit Suite. If we want to report your payments to Dun & Bradstreet, Dun & Bradstreet in the past has required 500 accounts be reported to them every month if you want to report to D&B. Well, a lot of small business owners don't have 500 customers to report their payments to D&B, so D&B won't let them report those payments to the reporting agency. They won't let them report them. So that's the problem, is that if you go to somebody that you have credit with right now, Keith, and you ask them, hey, I want you to report that to D&B, they probably don't even have a high enough a volume of accounts to get it reported to D&B. That's why it happens that way. Great question. Duvall says, I'm building my business credit. I have about 6 trade lines with D&B now report. It's shown approval and decline. So give me some more insight on that, and I can hopefully answer a question if you have one, Duvall. I have about 2 months D&B not reporting. Okay, so in order to have anything report to D&B, you need 2 things. You need a DUNS number, and you're also, on top of that, going to need at least 3 accounts reporting to D&B. So make sure you have your DUNS number. Make sure that at least 3 accounts are reporting to D&B. And if you do those things, that should be able to correct your problem. So with personal credit, almost every account reports to the reporting agency. We just talked about this, I think, with Duvall. In the business world, most don't. 7% of accounts that are with trade vendors actually report, which means most trade vendors, almost 93%, don't even report the credit that you pay them to the business credit reporting agency. So this is very different. In the consumer world, you are used to being able to just go get a credit card and it report on your commercial or consumer credit report. That's the way the system works. But in the commercial world, 9 out of 10 times the accounts you get don't report to the commercial credit reporting agencies, which means you're getting credit and using it, but you're not getting credit for it on your business credit report. You have to be very intentional about building business credit because most of these accounts do not report to them. So you have to be very intentional. You've got to set up your business separate entity. You don't want to do a sole prop. You want to do a corporation, an LLC, a partnership. You need to get an EIN for that business. You need to have a separate business contact information, business phone number, business address, business website, etc. Okay. And then with that, you need to get your DUNS number with Dun & Bradstreet. Then you need to get credit with vendors that actually report the credit to the reporting agency. That is the key here in order for this to work the way that you really want it to work, and to actually get credit for the payments that you're paying on time with the business credit reporting agency. Also, you've got to, as I mentioned, work with those vendors that do report. Quill, Uline, Granger, there's more. Okay, so the biggest problem people running into building business credit is getting vendor accounts. Now, our clients, we give access to a lot of secret accounts that you never hear me talk about on webinars. That's my agreement with our clients, is that they'll get privileged access that others don't get, even though I openly share so much info. So they have SEO services and website services, and they can get credit lines that report and all different kinds of things. But even if you're not a client, you still want to focus on Uline and Granger and Quill and Strategic Network Solutions. These vendors do report to credit, and they will give you credit even if you have none. So a lot of information and value that they can provide you. So the credit reporting agencies are different as well. In the business world, we deal with Dun & Bradstreet's the biggest, Experian the second biggest, Equifax is the third. There is a FICO SBSS score. So FICO is in the commercial world with a FICO SBSS score. And there's a company called Credit Safe that's very big in the UK and becoming more popular in the United States as well. But those are the handful. Those are the only ones that you really need to mess with. Experian, D&B, and Equifax are by far the biggest. Now, in the consumer credit world, we all know who they are. Equifax, Experian, and TransUnion, and then FICO offers a lot of scores. So difference in the bureaus, okay? Equifax, Experian are in both consumer and commercial. TransUnion's big in the personal world, non-existent in the business world. Dun & Bradstreet's the big leader in the commercial world, non-existent in the consumer world. So they are different there as well. So in the monitoring world, you are entitled to a free credit report with TransUnion, Equifax, and Experian through what is called, let me go back and see if I can go back here. Okay, so you are entitled to a free credit report every year with Equifax, Experian, and TransUnion. Okay, but there are no free credit reports in the business world. Okay, you're not able to get one. As a matter of fact, Credit Suite is the only company that even offers that. We offer you free access to credit monitoring. You can go and give us a call. Our number's right there on the bottom of this slide, 877-600-2487. We will give you a free copy of your business credit report with Dun & Bradstreet, Equifax, Experian. We're the only company that does that, okay? And just so you know, it's not free for us. We spend money even though we give you the reports for free, because as you've heard me talk before, I'm that obsessed with making credit monitoring accessible with business owners that we literally take a loss every single time somebody signs up for free credit monitoring. But it's that important that you monitor your credit. So we make it free for 30 days. And then if you continue after that, it's only $24 to monitor all 3 credit reports, even though it's $250 with the bureaus directly. But there is no free credit report because there is no annual credit report that is issued like we find in the consumer world. Okay, in the consumer world, you're entitled to a free report through annualreport.com, and you're entitled to that annual report because of a law called the Fair Credit Reporting Act. But the Fair Credit Reporting Act doesn't exist in the business world. So all of the protections that you have to dispute with the credit bureaus, to be able to have somebody need your permission to pull your consumer credit reports, to be able to get a free copy of your credit report, all of those privileges you have come from a law called the Fair Credit Reporting Act. The FCRA is not applicable in the business world. So none of those things are applicable. You don't get a free report. There's no standardized process to dispute items like there is in the business world. There's no standardized definitions of how the credit bureaus and creditors must handle disputes, what they can and can't report. None of those things exist in the business world, okay, including not being able to get a free copy of your credit report. Now, if you want the cheapest monitoring, you can go to creditsuite.com/monitoring. You can get monitoring for $24 there. And again, the other thing you could do is give us a ring at 877-600-2487. And if you give us a ring, then we will talk to you more about monitoring there as well. Okay, and Duvall says, okay, let me see. Whatever. Marcus, with the hybrid line of credit that you have spoken about in the past, is there a minimum time in business in order to be eligible? No, there's not. Marcus, we've got the product that you're bringing up. You can get up to a $150,000 credit line. It's called a credit line hybrid, 0% interest, benefit of the credit card side of it. You can take cash out at 0%, benefit of a credit line. That's why I call it a hybrid. It's got the best of cards and lines together. And a lot of these report to the business credit reporting agencies. So you could build business credit while getting money, 0%, up to 150 grand. All you need is a 680 FICO score or higher. Utilization matters, inquiries matter. We'll talk to you about that. That might limit how much you get if you have too much utilization or inquiries. But this works for startups. It's the best kind of funding I've ever seen for startups. No time in business requirements, no profit versus nonprofit requirements, no high risk industry restrictions as well. So hopefully that helps you there. Fred from YouTube says you should monetize your channel so we can donate to you during your live stream. I appreciate that. And as you know, a lot of it we don't monetize. We don't turn on ads on our channel. Maybe we will one day, but right now we want to make sure that you all have no barrier to being able to access the information that we go through here. And Eric says, is business license a key to corporate credit? It's not a key, but it will help you. If you have a business license, there are places like Granger that will automatically give you $2,500 credit lines just because you have a business license. So they absolutely help in the business credit building process. Thanks for the questions, everybody. So regulation and oversight, as I mentioned here, the Fair Credit Reporting Act is one law that actually regulates how consumer credit works. The Credit Card Accountability, Responsibility, and Disclosure Act of 2009 as well. The Truth in Lending Act of 1968. The Fair Credit Reporting Act we mentioned in 1970s. Just a few examples. Why are these examples important? If you ever want to fix your consumer credit, you need to learn these laws, or you need to learn or work with a credit repair company that can help you. I'm not in credit repair. I don't deal with consumer credit. All I deal with is commercial credit, commercial financing. But in the consumer world, there's a lot of credit repair companies that can help you that know those laws, or you should know the laws. Let me give you an example, okay? The Truth in Lending Act, for example, requires that if you solicit the lender, they are entitled by law to supply you with every single document that they ever have with your loan, your mortgage statements, all the documents you signed originally, etc. So the way consumer credit works within these laws is the credit repair company or you will go and say, hey, look, I want you to, this item is on my credit report. I think it's inaccurate and I need you to remove the item from my credit report. If you don't remove the item from my credit report, well, then I would like per your requirements in the Truth in Lending Act to get a list of every one of these things. And then like literally when the consumer credit card companies have a 5 to 10 page letter that goes with this dispute that asks them for every single document you ever signed, every statement you ever had. And by law, they're actually entitled to supply that. So that's the way a lot of really effective consumer credit repair works. They work within these laws. They go to the credit issuer and say, delete the item or supply all of the stuff that you're required to supply by law. The credit issuer says, I don't want to supply that stuff, and deletes the item. Now, that stuff's not possible in the commercial world because none of these laws are applicable in the world. All of these laws regulate how consumer credit must work, okay? But none of these laws are applicable in the commercial world. That's why you can't get a free credit report. That's why there is no regulation of how you dispute with the credit bureaus. That's why the creditors and credit bureaus in the commercial world aren't obligated to report in certain types of data, not required to support certain types of data. That all this regulation that supports you as a consumer isn't there in the commercial world, so something to keep in mind. Scores are very different in the consumer world as well. Score as high as $850, low as $300. Number of different types of business credit reports with different scoring models. There's two main ones in the consumer world: Vantage Score, which is owned by the credit bureaus, and FICO Score, which we're all obviously familiar with. Vantage Score was the credit bureau's attempt to compete with FICO. They got sick and tired of credit scores being provided by a third party. They wanted to do it themselves. Now, in the consumer world, there's also what are called scorecards. And these are industry scorecards. Last time I checked, there were 16 industry scorecards. And so let me give you an example. If you ever go to apply for a mortgage, then the mortgage broker will pull a mortgage industry option score. They won't even know the name of the score. Ask them, they won't even know. Like, very few people even know that. But it's called a mortgage industry option score. That score will weigh your mortgage history heavier into the overall score than everything else. It's why when you go get a mortgage, your credit scores they pull are different than what you pull with your own credit monitoring. Same as when you go to get a car, same as when you go to get a credit card. They have these different scorecards based on different industries. That's how consumer credit scores work. In the commercial world, very different. A lot of the reports will have 3, 4, 5 scores on them. Last week, we talked about Equifax's scores and I think Experian scores. And the weeks to come, we'll talk about D&B. We'll talk about Equifax as well. So D&B Paydex is the #1 score in the commercial world. Intellis scores the second. But each credit bureau has about 5 scores in the commercial world. Very different. Their scores in the commercial world will compare you to other people in your industry. Very different. Your scores in the commercial world will depict your risk of going bankrupt in the next 12 months. You don't see that in the consumer world. Okay, so the business world has predictive scores that predict things that will happen, and they have performance scores that just strictly rate you based on your past performance. We don't see any of that in the consumer world. So some of many, many, many differences in the consumer and credit scoring world. By the way, commercial credit scores usually go 0 to 100. Okay, well, all the main scores do. As again, consumer credit goes from 350 or 300 to 850. So a lot of differences with how scoring works as well. Who can access your report? Well, in the consumer world, because of the Fair Credit Reporting Act, you have to give somebody authorization to pull your consumer credit report. It's called permissible purpose per the FCRA, but there is no FCRA in the commercial world. So anybody can pull your business credit report. Lenders and credit issuers and suppliers, those are the people we would expect to pull a report, but your competitors can, your prospects can, your clients can. We do. We look at competitors' business credit reports because they show when the person's in trouble. When they start going late on payments, it's a ripe time to possibly come in and do an acquisition, possibly come in and do a joint venture. So this is why commercial credit provides great value. You can access these reports on all these different people, but you have to be keen because a lot of other people can access those exact same reports from you as well. Anybody can access your information the same as you can access anybody else's credit reports in the commercial world, but you don't need the permission like you do with the consumer world as well. Okay. And Deval says, in my DMB, my delinquency predictor percentile, it says decline in supplier evaluation, risk rating decline, and financial stress percentile improve. What does that mean? Well, those are all different scores. So ultimately what you're saying is the delinquency predictor predicts your risk of going bankruptcy in the last 12 months. The supplier evaluation risk rating has to do with how suppliers evaluate your business. That's a separate score. And then you have the financial stress percentile score, which compares your business against other people in your industry. So those are names of all different scores, but they may be telling you, Denville, that they don't have enough information to yet populate those scores. But they are telling you, you just named off 3 specific scores from D&B. Great timing. We just answered the question about how the commercial and consumer credit scores work. So thanks for tuning in from YouTube. So what reports tell lenders? Well, personal credit reports give lenders an idea of the owner's creditworthiness based on their personal credit history. Business credit reports obviously give the lenders an idea of the creditworthiness of the business based on the business's credit history, how the business pays its bills, okay? They can encompass more than simply whether bills have been paid in a timely manner, though it's definitely the most important factor. Business credit reports, as Denval just pointed out, they'll take into account other things like your financials. You can supply your tax returns to D&B and be put in a different risk category than if they don't have your actual tax returns. You can't do that in the consumer world. You can't supply your tax returns to the credit bureaus and then score you differently. But you can in the business world. You can give them more information and it will get you higher scores of the different scores they have. Now, don't get me wrong, if your financials suck, you don't want to send your financials to D&B. But if you have good financials, you want to supply your financials to D&B because it will actually give you a better score. But keep in mind, a lot of your commercial credit reports will then show you that too. Another difference that's not even in my slides. If they know your revenue, if they know your profits, if they know how many team members you have, all that information will show on your commercial credit report. But as a consumer, it doesn't show how many members are in your family. It doesn't show any of that information, okay? They're not going to actually be able to see that. They only see that in the commercial world. So again, a lot of different information is on the commercial credit reports that we don't see on consumer credit reports in the business world, including your revenue, including your profits. You'll even see that on your reports. Now, lenders may cross-reference information in the business credit with other factors that overall affect your fundability. This includes whether a business has all its licenses, UCC filings will end up on your business credit report. If there's any open collections, whether your business has bankruptcies. So a lot of things here. In the commercial world, when you apply for credit, they will look at these secret credit reports like LexisNexis, and then they will compare your company information against that to make sure that there's no fraud going on, to make sure your application is legitimate. If you get a loan in the commercial world, they will attach what's called a UCC filing to tell other people that you have loans on your commercial credit report. So you will have alerts that tell other people that you have loans on your commercial credit reports. We don't see those things in the consumer credit reporting agencies or in the consumer credit world. And another difference is that public records show on both consumer and commercial credit, right? Judgments, bankruptcies, those things, even collections will show. But lawsuits show on commercial credit reports and they don't show on consumer credit reports. So if you sue somebody or you get sued in your business, that will actually show in the public record section of your commercial credit reports. Obviously not the same in the consumer world. If you sue somebody or you get sued, none of that would show in your consumer credit report, but it will in the commercial world. So some other differences there as well. Okay, consistency in business name, address, we talked about this. Again, when it comes down to it, when you submit an application, they're going to look at your business credit reports and look at reports like LexisNexis to make sure your application data and that report data is congruent. It's a way that they fight fraud. Okay, so one of the differences between how those reports are used. Effects on fundability, this can get confusing because even though some things affect personal credit and not business credit, fundability is still an issue. Fundability is the ability of your business to basically get funding, the ability of your business to meet criteria lenders and credit issuers have to be able to get money. Many things affect business fundability, including your business credit, okay? How fundable your business is, business credit's a factor. If you don't build business credit, your ability to get the money you need at the terms you get is non-existent. You're never going to get the financing you want at the terms you get without business credit. Sorry, it's impossible. It's like having horrible personal credit and getting pristine rates on mortgages. It doesn't happen. Same thing in the business world. Not having business credit means you're not fundable and your ability to get the money you really want at great terms, it just doesn't exist. It's why you've got to build business credit. Okay, good business credit makes your business more fundable. It helps you get higher approvals. It helps you get better interest rates. It helps you get longer terms, which means your payments are just more affordable. Okay, so what does this mean? And again, we talked a little bit about that, but for one, it means that even though carrying high balances on business credit cards does not affect your business credit score, one other difference, okay, utilization has a small impact on your experience score, zero impact on D&B and Equifax, so you could max out your commercial credit scores in the business world, But if you max out your credit cards in the consumer world, you would tank your scores. This is why people screw this up. They use personal credit cards to fund their business. They overutilize those cards and they tank their consumer credit scores. If you use business credit scores to fund your business and use business credit cards for that purpose, well, then you could max out those credit cards. They could report to the business credit reporting agencies as maxed out, but it won't adversely affect your consumer credit scores. So just one reason you need to separate these. Commercial credit was designed to fund a business, meaning it understands how we operate as business owners. It understands we're going to carry really high balances, that we're going to max out the credit card sometimes in the month, and then we pay them off. That doesn't happen in the consumer world. In the consumer world, that's an indicator of trouble. People don't go put $30,000 balance on a credit card and pay it off the same month. That doesn't happen a lot in the consumer world, but it happens in the business world, okay? So it's one of those reasons you need to have separate consumer and commercial credit scores or reports, because that way you're getting credit for that in the business world and you're not adversely affecting your consumer credit as well. So you can't just forget about personal credit. It's true those accounts are not included in your business report, but you still got to pay those bills on time, because the business world does have blended scores that will look at your personal credit score. The FICO SBSS score, which is mandatory to get an SBA loan, will look at your personal scores behind your business scores. And it will really hurt you if you don't have business scores actually reporting. So you need to build business credit, but you always need to be concerned with consumer credit, because it will calculate into some of your business scores, but you don't see that in the consumer credit scoring world. Other factors that affect your fundability, in addition to business credit, personal credit, and consistency in information, these things can also affect overall fundability. Other agencies, the Small Business Financial Exchange, LexisNexis, check systems. SBFE is where all banks share information, like all what's on your application, how your loans perform. They have information behind the scenes that they access whenever you apply for a loan. LexisNexis is where all of your information is housed. It's intrusive, ridiculously intrusive. Every home you've ever owned, the building materials of your home, your HOA, the lenders you use to close the deal, the title companies you use to close the deal, the interest rates that you had, the loan terms you had on every home, every email address you've ever had, every phone number you've ever had, every fax number that you've ever had, every business license you've ever had issued, ever had revoked, your marriage license, your divorce records, all of that's in your LexisNexis credit report. I'm just scratching the surface of what's on there. So a lot of this other stuff is being used behind the scenes to determine how fundable your business is. We don't see that in the consumer world. The consumer credit reports are the main things that are actually used to determine credit worthiness in the consumer world, but not in the business world. All these other reports come into play. Okay, the application process affects overall fundability as well. You have to apply for the right products with the right lender. The timing is really crucial for all of that to happen as well, because again, if you're not doing that, then your chances of getting approved, if you're applying for the wrong time or applying for business credit in the wrong order, then you're not going to get approved. So in the consumer credit world, it doesn't matter. I can get, start with a Visa card. I can start with a MasterCard. I can start with an auto loan. That just doesn't really happen in the commercial world. In the commercial world, you're pretty much starting with very low limit vendor accounts, and then you're going from there. So another big difference between consumer and commercial credit. Okay, and Denval on his DMB shows 2 trades at $100. So that is probably, Denval, you need 3 trades, and that could be part of your problem that you're running into there. John says, who else pulls SBSS besides SBA? A lot of people pull SBSS. A lot of lenders, a lot of credit issuers pull SBSS. A lot of places that issue insurance. A lot of places that you can rent from or sign leases from. But it's most popular with the big banks. Wells Fargo, Bank of America, they're pulling it when you get credit cards. They're pulling it when you're applying for an SBA loan. Those are the most popular places that is. And Daryl says, hey, from YouTube. Hey, Daryl. Kevin says, at what point do we transition from vendor accounts to actual credit cards? Kevin, in the business world, you want to have at least 5 accounts on your credit reports. Then you can start to apply for store credit, retail credit, Staples, Office Depot, Amazon, Walmart. The more credit accounts you have, the more of those will approve you. So some might want you to have 5. Some will be 8, 9, 10. Now, if you're a client of Credit Suite, we tell you that every single credit card you get, we tell you how many accounts you need to have reported to get that credit card. If you're doing this on your own, it's trial and error. It's experimentation. And you could try our Facebook group, Get Business Credit. There's over 30,000 people in that group. We have hundreds of comments of posts every single day that take place. So people in that group can help you as well. But it just comes down to trial and error. But you can start to apply with about 5 accounts reporting. Eric from YouTube says, can I proceed to get corporate credit without a business license? Yes, you can. But if some vendors ask for it, you can say you don't have it. But again, this is one of these things will help you get credibility, help you improve fundability, and help you get approved if you have it. So I would check your county. In my county down here in Florida, they have what's called occupational licenses. An occupational license isn't required, but I can get one in my county. It's super cheap. And if I did that, now I have a license I can use, and it makes it easier to get my corporate credit. So Eric, it's not required, but it's going to make it a lot easier for you to get approved for the credit you want and more money if you have one. So let's recap. There's a lot of differences between consumer credit reports, right? Late payments are reported differently. You can't be, 1 day late or it hurts you in the commercial world, 30 days late in the consumer. Inquiries affect you differently. Don't affect your score in the consumer world. Do affect it in the consumer world, don't in the commercial. And inquiries from certain companies will show the company's name on consumer reports, not in the commercial. A lot of differences in who can access those reports. They're publicly available in the commercial world, not in the consumer world. Somebody needs your permission. Debt to credit ratio, utilization, okay, doesn't impact your scores in the commercial world except Experian, and it's not a lot, but they do in the consumer world. They don't in the commercial world. You cannot get a free copy of your business credit reports from there's no law that requires it, but we do make that available. If you give us a call at 877-600-2487, even though there's no law that requires it, we're the only place that help you get a free copy of your business credit reports, and we'll get you those with all 3 reporting agencies. And personal credit is still important. It improves in fundability amongst many other things, but again, very different than commercial credit. So I don't know. I didn't keep track, but there's got to be 30 differences between consumer and commercial credit. If you got benefit from this, do me a favor, give me a like, give me a love, give me a share, subscribe to our channel. That tells other people that this content's good, tells the social algorithms to show it to more people. That's the only thing I ask. It really helps me a lot. And if you got value out of this, subscribe on our channel. But again, we go live Tuesday and Thursday at 1. Wednesday at 11. Even when I'm on the road, you can see I'm at a conference this week, and I'm still here cutting free from the conference to do these. So I'm always trying to do these, and if I'm not, I will have somebody else on my team represent. But you can see 99% of the time I'm here. Tuesday, Thursday at 1, 11 o'clock on Wednesday, all Eastern time. We have a podcast you can listen to on the go, Instagram, Twitter tips daily. You can access it all at the top right of our page, creditsuite.com. And I want to go ahead and make sure that I get to any additional questions. I appreciate you working with me on comments on this because, again, it's a little bit different. Usually I have 2 screens and I see your comments in real time. I have to kind of chime in and go back here and look at this. So I appreciate your patience. Marcus, thank you for tuning in from YouTube. I appreciate it. And Am Floyd says, hello, would it be possible to get a Wells Fargo Business Secure credit card? I have 5 or 6 net. You can, and I would check with Wells Fargo, but Wells Fargo recently stopped reporting their secure credit card to DMB. That changes all the time. But in this moment, they're not reporting to DMB, so I'd check with them before you do it. It's a great secure credit card, though, if they report, but right now they're not reporting. And again, that changes. You might want to check that daily because that definitely changes. Eric says, subscribe and highly appreciate you. Notifications turned on. Thank you. And Eric brought up a good point. Now, when you subscribe on YouTube, they ask you, do you want to get notifications? Guys, I don't send you a bunch of spammy junk. It notifies you when we go live. It notifies you when we put new content up. So you'll know, and all of our content's this kind of stuff. It's just flat out educational stuff that will make you a better entrepreneur by understanding how commercial credit works, by understanding how to control commercial credit, and by understanding everything you need to do to be able to get money for your business. So I'm going to wrap this up. Thanks everybody for tuning in. I'll see you tomorrow, which is Wednesday at 11 o'clock Eastern. And we're going to be diving into even more awesome topics that will help you get money and credit for your business. Tomorrow's topic, PPP loans. Yeah, I know you're like, I've heard that before. Did you know you can get a second one? Maybe so. We're pretty close to you potentially being able to get a second PPP loan. What's going on with EIDL loans? A lot of stuff's happening. Tomorrow, we're going to dive in and we're going to talk about what's in the works right now with Congress and the House. What's happening where you might be able to get a second PPP loan? What's happening with other economic stimulus that's available with this new laws that they're planning on passing yet, a new act? We'll be diving into all that stuff tomorrow. So I look forward to seeing you tomorrow at 11 o'clock Eastern. Thanks, everybody, for tuning in. Have a great day.